So, you want to learn bookkeeping. Chart of Accounts, by Dave Marshall. The neglected red-headed stepchild. Why would I say this? In my opinion, this topic, like the red-headed stepchild, is not given the attention and respect it deserves. Many of the textbooks and courses that I've looked at gloss over the chart of accounts by giving a definition and throwing in a simple example. This tutorial is my attempt to give this topic the respect that it is due. Of course, we're going to define and use examples. Unlike the others though, like learning about a clock, we're not only going to learn to tell time, but also what makes the clock tick. I, myself, was almost guilty of neglecting this topic. I caught myself and decided I needed to treat this topic with the respect that it deserves and made this tutorial. What is the chart of accounts? The chart of accounts is a listing of all the individual accounts in the general ledger that contains the account's name, a brief description of the account, and optional other identifiers, codes, or a coded account number assigned to aid in recording, classifying, summarizing, and reporting transactions. Your accounting system is built around this skeleton list of account names called the chart of accounts and is organized by the types of major accounts. The accounts you set up are tailored for your particular type of business. What's an account? An account is a separate record for each type of asset, liability, equity, revenue, and expense used to show the beginning balance and to record the increases and decreases using debits and credits for a period of time and the resulting ending balance at the end of the period. All the individual accounts make up or become a part of the chart of accounts. What are the major type of accounts, how are they normally organized, and what are some examples? If you don't already know, the major types of accounts are assets. Formal definition: the properties used in the operation or investment activities of a business. Informal definition: all the good stuff a business has, anything with value. The goodies includes cash, receivables, investments, buildings, land, equipment, vehicles, etc. Liabilities. Formal definition: claims by creditors to the property, assets, of a business until they are paid. Informal definition: others' claims to the business's stuff. Amounts the business owes to others. Includes payables, notes, loans, mortgages, etc. Equity. Formal definition: the owner's rights or claims to the property, assets, of the business. Informal definition: what the business owes the owners. The good stuff left for the owners assuming all liabilities, amounts owed, have been paid. Includes owner's capital invested and the accumulated profits or losses for the business since it began. Revenue. Formal definition: the gross increase in owner's equity resulting from the operations and other activities of the business. Informal definition: amounts a business earns by selling services and products and investing. Amounts billed to customers for services and or products. Includes sales of goods and services, revenue directly related to daily operations. Other income, revenue not directly related to daily operations such as interest and dividends. Expenses. Formal definition: decrease in owner's equity resulting from the cost of goods, fixed assets, and services and supplies consumed in the operations of a business. Informal definition: the costs of doing business. The stuff we used and had to pay for or charge to run our business. Includes cost of goods sold, the cost of the products being sold by the business. Operating expenses. The expenses related to daily operations such as rent, advertising, insurance, etc. Other expenses. The expenses not directly related to daily operations such as interest and financing. How is the chart of accounts organized? The chart of accounts is typically organized and listed in a special order. Balance sheet accounts are listed first, followed by the income statement accounts. Note: this USA order may vary depending on your country. Balance sheet accounts. 1. Assets. 2. Liabilities. 3. Owners, stockholders. Equity. Normally, the order of the listing of the asset and liability accounts is based on liquidity. The most liquid accounts are listed first. Thus, when listing assets, cash is listed before accounts receivable, which comes before inventory. Likewise for liabilities, accounts payable comes before notes payable because accounts payable are normally paid before notes payable. Income statement accounts. 1. Revenue and expenses. Revenue. 2. Operating revenues. 3. Non-operating revenues and gains. 4. Cost of sales. 5. Expenses. Operating expenses. Non-operating expenses and losses. Revenue and expense accounts tend to follow the standard of first listing the items most closely or directly related to the operations of the business. The revenues, sales, resulting from normal operations are listed before revenue or income resulting from non-operating sources. Likewise, the operating costs and expenses that are most closely related to the operations of the business are listed before the non-operating expenses. 1. Cost of sales is listed first followed by 2. Operating expenses and then 3. The non-operating expenses. The operating expenses are often grouped into additional categories such as selling expenses and general and administrative expenses. There are no rigid rules as to the order that the operating expenses are listed within a category. What are sub-accounts? Sub-accounts are used to divide or break a main account into further, mini-accounts to identify, report on, and manage specific divisions of an account. The main account is also referred to as the parent or summary account and the subdivided accounts are called the children. The balance of the main account, parent, summary, is derived from the sum of the balances of all the sub-accounts, children. What's the general ledger? The general ledger is just a book, manual system, or computer file, computer system, containing all the account balances and activity, increases and decreases, for all of a business's assets, liabilities, equity, revenue, and expense accounts that are included in the business's chart of accounts. The general ledger has an account for each account that is listed in the chart of accounts. What's the purpose of a chart of accounts? Its purpose is to establish a framework for classifying, recording, and reporting on your business transactions and to use as an aid, reference, for looking up accounts and their associated account numbers when recording transactions. In a nutshell, the chart of accounts is simply an organized and coded listing of all the individual accounts used to record your business transactions and that also make up the general ledger. What do we mean by coded? First, let's define what a code is. A code is numbers, letters, or a combination of letters and numbers, alphanumeric, that is used to represent, identify, and organize something. Often, you will see the something referred to as an object. A simple example is an abbreviation for the states that comprise the good old USA. My state's code is TN, which stands for Tennessee. The code itself, the numbers, letters, or combination of letters and numbers is usually meaningless. The code gets its meaning when it is assigned or related to something, object, such as a document, invoice number, employee, product, account, etc. In accounting, one of the main uses of codes is to identify accounts. Account codes can be numeric, numbers, alpha, letters of the alphabet, or alphanumeric, combination of numbers and letters. Setting up and assigning your codes to the accounts, whether for a manual or computerized system, is the most critical and often the most time-consuming and confusing step in establishing and setting up your chart of accounts. Good codes display the following characteristics. Uniformity. Uniformity means always using the code in the same way every time you use it. Dates are often represented differently by different countries. If dates were to be used as a code in the USA, they should always be formatted the same way, such as month, day, and year. Uniqueness. Each code and/or code segment should uniquely identify only one thing. If you were going to use an employee's initials as a code to identify your employees, you would probably eventually have a problem if you had any employees with the same initials. On the other hand, if you used their social security number, you wouldn't encounter any problems because everyone has a unique social security number. Expandable or adaptable to change. Things change and your coding system should be designed to be able to easily expand and change to handle adding new codes, accounts, departments, products, employees, etc., and reporting requirements as your business grows without having to completely revise your coding system. Applying this characteristic to a chart of accounts would require your account coding system to have flexible user-defined accounts that allows unlimited addition of new accounts. So, you want to learn bookkeeping. Chart of Accounts, by Dave Marshall. How codes are used in conjunction with building the chart of accounts. As coding applies to bookkeeping and accounting, we just mean that we assign a name, number, or both, description, and group or category identifiers to each unique account. Account numbering system. A simple or elaborate numbering system composed of numbers, alphabetic characters, or a combination of both alphanumeric, is often used in setting up a chart accounts. Digits in the account number are used to indicate the type of account, a location of the company, a division of the company, a department of the company, etc. The account number could end up to be quite lengthy and composed of many digits representing the type of account, location, division, department, etc. In other words, we define accounts using ranges blocks of numbers. These number ranges blocks are used to define major account categories and subcategories by assigning these numbers to each account that belongs to a unique group or category range. Block codes used with numbers is one of the most frequent coding methods used when setting up a manual or computerized charts of accounts. Let's take a look at a simple example to help clarify what we're talking about. By separating each account number by several numbers, room is provided for adding additional new accounts. Each of our blocks allow a maximum of 100 accounts. The first digit number represents the type of account, asset, liability, etc. If the first digit number is a 1, this account is an asset. If the first digit number is a 2, it is a liability, and so on. The block assigned for the type of account is used to assign account numbers to the individual accounts. Using account identifiers or attributes is another method of coding that may be used for developing your chart of accounts. Account identifiers or attributes are unique building blocks or pieces of information used to design and set up the chart of accounts. Each block or piece attaches additional identifying information to the account. Accounts are defined by assigning identifiers such as a division code, department code, type of account code, asset, liability, equity, revenue, expense, account group code, current asset, current liability, etc., sequence code, order the account appears in financial reports, etc., that are used to group and report on different segments or activities of the business and provide information for formatting reports. So, you want to learn bookkeeping. Chart of Accounts, by Dave Marsall. Types of coding systems and their structure. A. Sequential. Consecutive numbers are assigned to uniquely identify something. As related to accounting, this something is normally documents. The consecutive numbers are assigned to documents such as checks, invoices, purchase orders, receiving reports, customer payments, etc. in order to control and identify specific documents. Pre-printed forms such as checks or customer invoices with the numbers 0001 through 9999 assigned are examples of using a sequential coding system. B. Blocks or groups. Block codes use characters, numbers and/or letters to assign or organize something into special unique groups or categories. The block is actually a range block of characters that uniquely identify something. Block codes usually have a fixed length. As I stated earlier, block codes using number ranges is probably the most frequent coding method used when setting up a manual or computerized charts of accounts. Example of a simple account numbering system using block coding with numbers. 8 blocks of numbers have been used to assign account groups based on the types of accounts in the above example. One limitation of our earlier account codes presented that you're limited to 100 accounts of each type. How could I easily provide for 1,000 accounts of each group or type? By simply making the account number 4 digits numbers in length instead of 3 digits numbers as illustrated above. Hierarchical codes. Structure that resembles an upside-down tree structure. Information is classified and grouped into successive levels or layers. I say upside-down tree because the root of the tree begins at the top and the tree branches go downward, while a normal tree structure has its root at the bottom and the branches go upward. Some examples of this type of structure are a company's organization chart and an ancestry chart. The structure depends on defining parent and child relationships. Using this type of coding system for developing a chart of accounts allows summary, subtotals, and detailed information to be reported. D. Mnemonic codes. Mnemonic means something that aids the memory. Mnemonic coding systems use letters and/or numbers as an aid for identifying and remembering something. If you recall, I mentioned earlier that most codes are meaningless by themselves. This is an exception. This is a code that conveys meaning by itself. Abbreviations that we commonly use is an excellent example of using mnemonic codes. A possible use of mnemonic codes used with a chart of accounts would be using codes similar to the above for identifying and assigning the type of accounts. What does the first character of our code tell us? Hopefully, you said the type of account. A asset. L liability. O owner's equity. R revenue. C cost of goods sold. E expenses. E faceted codes. Alphabetic characters and/or numbers are often used to identify pieces of information called facets that can also be used to define accounts. Each facet is a piece of information. The facets are combined like building blocks to construct an account. A faceted code is one that is made up of group or category codes, code segments, each of which identifies a unit of information. In constructing a faceted chart of accounts, the complete account code is actually made up of many mini-codes, facets. Each mini-code, facet, tells us something about the account. The advantage of using mnemonic codes is that they help trigger your memory. Which one of these accounts triggers your memory? 1000, or a CA? Although they both are acceptable and identify the cash account, personally, I prefer the mnemonic code structure, a CA. F combination coding system. While it might appear that you have to select one type of coding system to use for your chart of accounts, this is not necessarily the case. Unless the accounting software you plan on using dictates a specific coding system that has to be used, you can use numbers and/or alphanumeric characters and a combination of hierarchical codes, block codes, faceted codes, and mnemonic codes to develop your chart of accounts. Mixed codes can sometimes offer more understandability and flexibility than using one type of coding system by itself. Coding summary. Using codes is not a difficult concept. After becoming familiar with the codes, they allow us to convey a lot of meaning with just a few characters. Think of them as an abbreviation for something. My full name is David William Marshall, but my name can be conveyed to those who know me using DWM, a code called initials. Codes, when used with a chart of accounts, identify and convey all the attributes, characteristics, of an account that are either needed or required for reporting on and controlling the financial activities of a business. In general, an attribute is a property or characteristic. Color, make, and model, for example, are all attributes of a car. Some attributes that may be assigned to an account are the account name, account description, type of account, normal balance type, debit or credit, etc. So, you want to learn bookkeeping. Chart of Accounts, by Dave Marshall. Why is the chart of accounts important? Setting up a chart of accounts is one of the first, if not the first, task you perform when setting up an accounting system, whether a manual or computerized system. A business needs and should want to know where the money is coming from and where it is going. Your chart of accounts is a tool for gathering and organizing this type of information. A business must have useful information in order to be able to survive in today's competitive business world. You notice that I said information. Raw data is not very useful until it has been massaged and summarized into meaningful information. Your accounting system should be designed and used to provide much of this detailed, summarized, and needed information. The information available for your financial reports, summary and/or detailed, often depends on how well you designed your chart of accounts. One of the main keys to a properly designed accounting system is your chart of accounts. What needs to be considered in planning and setting up a chart of accounts? Let's begin by listing and discussing some considerations. What I call the Goldilocks and the Three Bears rule. In the fairy tale, as most of you are aware, Goldilocks, a little girl, ventured into the home of the three bears, Mama Bear, Papa Bear, and Baby Bear. While there, amongst other things, she tried Papa Bear's porridge, Mama Bear's porridge, and Baby Bear's porridge. Papa's was too hot, Mama's was too cold, and Baby Bear's was just right. In setting up your chart of accounts, you're trying to find the porridge that is just right, not too hot and not too cold. The too cold represents a simple basic chart of accounts, while the too hot represents a very detailed and complex chart of accounts. What we're striving for is the just right. In other words, try to keep your chart of accounts as simple as possible yet designed with enough detail to provide the information and reports needed for managing and controlling your business. There is a trade-off between simplicity and the amount of detailed information your business needs. The easy part: many accounts that make up the chart of accounts are obvious and common to all types of businesses such as cash, accounts receivable, accounts payable, are needed and used by businesses both big and small. The qualifications and knowledge of your accounting staff, whether it's just the owner, a bookkeeper, or a full-blown accounting department. If you set up a complex system, your staff may need special training. Your type of business: retail, wholesale, service, manufacturing, etc., your industry, and your specific business. Even businesses that are the same type and industry might have special or unique requirements. While a service business may not have a need for a merchandise inventory account, a retail or wholesale type of business normally would. In addition, there are likely to be differences even among the same type of business. One service business might have only one cash account, regular checking, while another service business might have 3 cash accounts such as petty cash, regular checking, and payroll checking. Whether you use the accrual or cash basis of accounting. If you use the cash basis, some accounts such as accounts receivable and accounts payable would not be a part of your chart of accounts. Complexity of the structure of the business. Is the business a small ma-and-pop operation or a super corporate conglomerate composed of many divisions, plants and departments? A complex structure will probably require a chart of accounts that provides the capability of reporting on the results of the business segments such as divisions, plants, departments, etc. The reports you want, are required, and/or needed for internal use and to satisfy owners and government or regulatory agencies. First, define and determine what reports are required, and then determine and set up the chart of accounts that will satisfy your reporting needs. What you're actually doing is working backwards using the reports to determine the structure of your chart of accounts that will be able to supply the information needed for your reports. Special consideration should be given to any governmental or regulatory reporting requirements that may pertain to your chart of accounts. An example for USA businesses would be IRS requirements to have accounts for meals, officer salaries, travel, and entertainment. Other countries usually have similar tax rules. The importance of a logical numbering or coding system that provides the necessary detailed information and is flexible enough to allow you to add accounts as necessary. Computerized or manual system. Keeping track of detailed information manually is time-consuming, and few small businesses have the staff to do it. The more detailed the information your business requires, the more likely you are to need a computer and accounting software. While a computer and accounting software are not an absolute necessity for a small business, with the low price and availability of computers and accounting software, some free, I'm hard-pressed to think of a valid reason not to use these tools. Do it right the first time. Even though you can always add or remove accounts, you should attempt to initially do a good job of determining the accounts your business needs. Adding and/or removing accounts distorts comparisons between periods. Monthly, quarterly, yearly, etc. comparisons can be extremely beneficial in analyzing your business. Let's make a simple list based on our discussion to serve as a simple aid as to what to consider when setting up your chart of accounts. Manual or computer system. Financial information and reports needed to manage your business. Financial reporting requirements and to whom. Information needed to prepare tax returns. Information needed for any special regulatory reporting requirements. Type of business. Manufacturer, retailer, wholesaler, service, nonprofit, government. Size and complexity of the business. Staff size and capabilities. Need for a simple or more complex coding system. So, you want to learn bookkeeping. Chart of Accounts, by Dave Marshall. Chart of Accounts and accounting and bookkeeping software. Some of the current accounting software programs are even designed without using account numbers, numeric digits, at all, and use the account name to set up the chart of accounts and identify the accounts and further define the accounts by assigning additional identifiers. Additional identifiers might include 1. A division code. 2. A department code. 3. A type of account code, asset, liability, equity, revenue, expense. 4. An account group code, current asset, current liability, etc. And 5. A sequence code, order the account appears in financial reports, that is used to group and report on different segments or activities of the business and provide information for formatting reports. Others make it optional for using account numbers, numeric digits. Many still strictly adhere to a number grouping system using numeric digits. Some useful features provided with good accounting software includes 1. Sample charts of accounts for different types of businesses, retailer, wholesaler, manufacturer, or service type, and organizational types, sole proprietor, partnership, corporation, etc. 2. Flexible methods of structuring the hierarchy and assigning account numbers. 3. User-defined and user-controlled chart of accounts. 4. Allows unlimited number of user-defined accounts. 5. Flexibility to handle user-defined account number lengths. 6. Flexibility to create an organization's hierarchical structure to use for management reports. 7. Flexibility to define an unlimited number of summary reporting paths for report writing and inquiry purposes. 8. Support of control and subsidiary accounts. 9. Support of alphanumeric accounts. Where to find samples and additional guidance. 1. Many accounting and bookkeeping software programs have a number of canned charts of accounts for different types of businesses and industries that can be used as guides or samples when setting up your chart of accounts. 2. Many trade or industry associations provide recommended sample charts of accounts for their type of industry. 3. Accounting textbooks. 4. Your Friendly Accountant. 5. Internet searches. My searches didn't produce much. That's one of the reasons for this tutorial, but you might be luckier than me. So, you want to learn bookkeeping. Chart of Accounts. By Dave Marshall. What should you now know? Putting together all that we just discussed, you should now understand or at least be familiar with what the chart of accounts is. As stated earlier, the chart of accounts is a listing of all the individual accounts in the general ledger that contains the account's name, a brief description of the account, and optional other identifiers, codes, or a coded account number assigned to aid in recording, classifying, summarizing, and reporting transaction. A chart of accounts can range from very simple to very complex. What codes are and how they're used to assign information and build a chart of accounts. The brain of your chart of accounts is your coding system. It determines what information and reports you can and cannot produce. Just like your own brain, a good coding system allows you to organize, process, store, and retrieve needed information. What to consider and think about when setting up a chart of accounts. How the chart of accounts is closely related to the balance sheet and income statement. Where to find samples and additional help. If nothing else, the importance of setting up a good chart of accounts for your business. My last words of advice. Setting up your chart of accounts for a reasonably complex business by hand, as well as recording and classifying your daily business transactions, are time-consuming tasks if you choose a manual accounting system. The tasks become much easier if you use accounting software to set up and do your bookkeeping. As I mentioned earlier, many of accounting software programs have a number of canned chart of accounts to choose from. In addition, for a task this important, it doesn't hurt to consult with your friendly accountant.